The snow is falling, the eggnog is spiked, and the typical WallStreetBets degenerates portfolio looks like the castle from Frozen. It's that time of year again, folks. The holidays are here, and so is the chaos of a WallStreetBets Christmas. While the typical scrub is decorating pine trees, our degenerate family is gearing up for a different kind of green. So grab a seat by the fire, sniff another line, and get ready to find out if this episode's traders show up on Santa's naughty or nice list. My fellow dipshits, it is my honor to present the Dankest trades of the FrostFest. Let's start this party with an apparently single father of several children by the name of ForeignBath4640, who joined Reddit in December 2020. Working in an unspecified field, the 29-year-old pulls in a good $120,000 a year in South Florida, an area not known for its affordability. Living in a beach town, our man determined in early 2021 to use RAD140, an androgen receptor adjustment supplement of some kind, to perform look maxing so as to look his best on the beach and hopefully attract a mamacita to help him raise his children. He also had an affinity for sneakers and chatted about how to max his footwear stat as well. But even with a six-figure salary and crushing liquid hormones, living large in South Florida is not cheap. The big dog housed his family in an old house in need of roof replacement, which was probably filled to the brim with asbestos. By late 2024, he decided to flip the script and relieve his children of this squalor. It was time to seize the moment and pursue thick bags before it was too late. He revived his unremarkable Robinhood account with an injection of paychecks and savings to the tune of 80 grand. And as the street pharmacists say, the first one is free. Our hombre's first unspecified options trade blessed him with a gain of $30,000, bringing his portfolio to $110,000 in a near instant. This initial trade got him high on victory, and as he had clearly cracked the code to successful trading, he dumped in more of his savings, pushing his portfolio to $160,000. With liquidity like this, a much richer Miami lifestyle was in play. With the right moves, he could bring his family from niños pobrecitos y flacos to hijos gorditos del gran jefe. With Papa Elon poised to lead the Department of Government Efficiency, the market collectively agreed that Tesla buying a president was a worthwhile investment. All through November, Tesla stock had been flying higher as President Mango appointed the Doge father to a glorified consultant position next to the seat of power. With Tesla appearing prepped to continue rising into December, buying out of the money calls was such an obvious choice, it would practically be haram not to buy. In a decisive trade, Papa Bathtub took a leap of faith by diving in headfirst with calls on approximately November 29th, expecting Elon's power play to continue yielding fruit. By Christmas, he planned to be bathing in banknotes, except for one small problem. The following Monday on December 2nd, some jabroni judge from Delaware named Kathleen put Papa Elon's $56 billion pay package to the sword, declaring it null and whack on the grounds that Elon influenced shareholders to vote for it. When the news broke, Tesla started reversing course and lost $15 of share price on the morning of December 3rd. Although this pay pack getting shot down shouldn't have influenced Tesla's share price materially, the blowback may have been influenced by shareholders getting spooked that courts would not rubber stamp everything Elon said, and therefore he'd face headwinds in his new political role. Worse, the Chinese bought fewer Teslas than anticipated, to the tune of a 4.3% slowdown. This news about the Chinese pivoting to their domestic BYD electric vehicles likely indicated that more bad news for Tesla was just around the corner. Being balls deep in calls, the Bathman's position got slapped. The drop in price with limited time until expiration cost him 50% of his portfolio right out of the gate. A full 80 grand dissolved into hot queso. He reassessed the news, and although he provides no rationale for his next move, we must imagine that he determined that Tesla would indeed pull back further after this two-hit combo of bad news. He switched jackets and put the remainder of his portfolio into puts to win back his losses on a deeper decline. But this team switch fell flat on its face. Days later, the Muskrat tweeted a strong dunk on short sellers as investors bought the dip, driving the stock back to new highs. Analysts digested the dunk, and even notorious Tesla bears decided that with Mango in Elmo's pocket, Tesla was sure to continue climbing. The stock ripped its way to new highs with Elon flexing the whole way. It was a perfect storm of losses for the bathtub. Nuestro hermano was left with the crushed shell of a portfolio, ground down to a pitiful 9K. $150,000 was deleted in the span of a few weeks. With no copium left to dull the pain, he realized that he had a problem and resolved to slowly rebuild a more stable portfolio with $30,000 a year at a time in deposits. At that rate, he would only have wasted about 5 years of his investing life, climbing back to break even by age 35, compound interest aside. Although his dreams of giving his kids a decent home and probably a stepmother by 30 were crushed, at least this would leave him on his feet in time to enjoy his DILF stage. Enjoy your bath, muchacho. Now, let's hear from our sponsors so I can get paid. Hey gente, are you garbage at trading? Do you FOMO into stocks at the top and panic sell at the bottom? Then you're in good company, because that sounds a lot like me. It got to the point where I expected a stock to drop just because I bought it. And that's why I swallowed my pride in 2020 and did the unthinkable by signing up to Seeking Alpha. Their Quant tool is the reason I bought Prudential at $67, and I'm up 77% while collecting 7.7% yield on cost. Lots of sevens there. And the reason I got a 130% gain on ET and collect 15.5% yield on cost. And the reason I'm up almost 70% on Royal Caribbean from just a few months ago. Keeping in mind that past performance does not guarantee future results, I can say I'm pretty confident in the results so far. I consult Seeking Alpha's Quant analytics anytime I plan on buying a stock, and with their recent alpha picks, I usually don't even have to do that anymore. These returns aren't the result of backtesting. Their alpha picks have consistently crushed the S&P, which is why I always look forward to their new ticker every 2 weeks. I know, paying for stock picks is haram. It's beneath us real traders. In other words, it's an ego thing. And while the old me would still be FOMOing into meme stocks and losing thousands, the new me spends a few hundred per year to get spoon-fed picks from actual Wall Street quants. It's pretty typical to see me reinvesting my dividends and options gains into whatever alpha picks pushes my way. Right now, Seeking Alpha is selling its premium subscription bundled with alpha picks for a sharp discount. If you want just the quant, you can buy the premium subscription separately as well, which includes a 7-day trial. Alpha Picks is also available on its own. See my link in the description to get in on the discount, and thank you to Seeking Alpha for sponsoring. Now, let's get back to the chaos with Dank Trade number 2. Scoring the number 2 spot is a soccer fan and Pokemon enthusiast from Long Island by the name of San Pato, which may be a reference to Donald Duck in Spanish. A longtime Redditor who joined in February 2013, St. Donald began his shitposting journey by recommending they build the Qatar World Cup Stadium underwater to ensure consistent weather. San Pato appears to be a computer science graduate who prefers a mechanical keyboard for coding. He also spent a substantial amount of time answering questions on computer science subreddits, indicating a passion for his craft. For a long time, he used Reddit as it was envisioned, social media for the socially inept. But when WallStreetBets hit the scene in early 2021, San Pato was among those who got grim reapered into the gambling den we call home. As one whose first serious exposure to the stock market was the GameStop squeeze, a certain level of derangement is to be expected. His comments usually revolved around unspecified hedge funds driving GameStop down to pauperize the common folk. As was typical among the apes, he also told others to polish their diamond hands and hold GameStop at all costs. Ultimately, the extreme bulls on GameStop bit the dust, and San Pato appears to be among them, as evidenced by a 3-year hiatus from WallStreetBets. During this time, he continued posting on soccer and computer science subreddits, with no mention of his losses or the ape cult. Silent as he was, the duck continued operations in the shadows. Perhaps in spite of, or even because of his unspecified GameStop losses, our man sought another way, a better way to build wealth. During those 3 years of financial radio silence, later comments would reveal that he was saving his paychecks from work as cash, or investing conservatively into indexed ETFs to build a nearly $96,000 nest egg. This is solid financial management, but the value of money is continually stripped down by inflation, and conservative investing approaches while you sit at a desk to write C# video game mods just doesn't have the sauce. $100,000 of investments goes a long way, but it's not enough to break the middle class mold when prices just keep rising. With the wind in his sails, the time to aim higher was fast approaching. September 2024, Duckface launched himself back into WallStreetBets with fanfare, taking on 2 extremely aggressive ban bets that SPY would rise 3% in a day, and later that Triple Q would rise 5%. If you've been living under a rock, ban bets are comments in which you put your WallStreetBets access on the line instead of your money. Success gives you bragging rights, while failure gives you a temporary ban. El Pato lost both of his ban bets, suspending him for 24 hours and 72 hours respectively, a pair of fat L's. But after a few more bets like this, our man's thirst for risk escalated until it couldn't be quenched by degenerate ban bets. It was time to liquidate his boomer positions and nut up. In late September, our man went in elbow deep, anticipating a generational drill in US equities. No rationale was provided, but in short order, He became frustrated by the market shooting up instead of down, causing him unspecified losses on his puts. Analysis of later posts indicates this L was likely close to $20,000. This was not the way. If he was going to right this ship, he'd need to take notice of something else happening outside his little bubble. Backtrack a few weeks to mid-September. The Han Empire injected high-octane financial stimulus intravenously across the land. The intent was to reinvigorate the Chinese economy, which was still struggling after the COVID slump. Sino-Soviet stocks rallied massively in the days that followed, reaching a peak on October 7th before starting to pull back. Fears of a larger blowback began to take root, and Chinese speculators who bought into the hype started paper-handing potential losses. But Big Pato cared little for the plight of the Chinese. Instead, this volatility presented him an opportunity where he could capitalize on the dip. While the premier of West Taiwan stimulated his economy, San Pato could likewise stimulate himself with gains. On October 11th, our man decided the dip in Chinese equities had run its course, and in short order, the market would resume its rally. His bullish sentiment received widespread acclaim in Beijing, which boosted his social credit score. The time to strike was now. Instead of targeting a single stock, Papa Pato set his sights on FXI, an ETF that tracks Hong Kong exchange-listed companies, similar to SPY, but much more Chinese. Since FXI would benefit not only from the stimulus, but also from the government relaxing its ironclad grip on tech giants like Alibaba and Tencent, this diversified holding would allow him to capture all the winners of this huge boom. With his approximately $80,000 that remained, Papa Pato YOLO'd into 870 call options at the $34 strike price, expiring October 18th. At the time, FXI was trading in the mid-33s, putting his calls just slightly out of the money. But with an expiration just 1 week out, San Pato needed a rebound, fast, or else Theta would begin feasting on FXI options stir-fry. Over the weekend, San Pato hoped that China would come through with hot news to turn the slump around, but come Monday morning, there would be no saving grace. The days ticked by, October 18th loomed, and San Pato's calls stayed stubbornly out of the money. Theta started to really kick in, chewing up his calls like General Tso's chicken. What started as a play on China's rebound had devolved into a full-on race against time. Our man needed a great leap forward to get FXI back on track. With 30 minutes until expiration, Darkwing Duck prayed for a 5% Mao boner, but the Red Dragon turned its back on him. Everything was wiped out. Within the span of a month, El Pato lost almost 100% of his $97,000 portfolio, leaving him with less than $1,100. He denounced China as a scam, crushing his social credit score to 0, even lower than his account value. Armed with only the putrid husk of a portfolio, he insisted on driving on. The man still had $1,100 left to lose. His Hail Mary was going all in on 0 day to expirations until he made his $97,000 back. To give you some perspective on the proportions here, it would be like making $90 million by going all in on 0 DTEs with $97K. But just as Cao Cao defeated an overwhelming force at the Battle of Guangdu in 200 AD, worse odds had been overcome before. Equipped with a prayer and $1,000, Chief Pato bought puts on Triple Q with bitter indignation. And as a final nail in the Mallard's coffin, the market bounced upward immediately on his buy. His last Hail Mary was shot down by Winnie the Pooh's anti-aircraft cannons in retribution for his abandoning FXI. The shattered fragments of his portfolio burned to ash, leaving our man hopelessly in the poorhouse. WallStreetBets users started to bombard the down-and-out duckling with a barrage of memes, mocking him for his glorious donation to the Chinese Communist Party. With the money he had left, the only dips he could afford to buy were the generic Walmart kind. By his own admission, he'll never financially recover from this loss. As any baguette-eating Mexican could tell you, San means without in French, and Pato means duck in Spanish. Now, without ducks or money, our man is adrift in the Yellow Sea in deep despair. But he did recognize a silver lining. His losses will be about 32 years of tax deductions. 32 is also the number of documented duck species. Coincidence? You decide. Congratulations on the tax write-off, Stuckface. Now the moment we've waited for, the dankest trade of the FrostFest. Coming in hot is a 37-year-old freedom lover with the sadistic alphabet soup name of America91. Our man joined Reddit on April 7, 2019, and made Greta Thunberg proud by posting an idea to an anarcho-capitalist subreddit about creating zones of environmental health in which nature would be allowed to thrive, free of human interaction. This would somehow differ from national parks, but the idea was shot down by his fellow ANCAPs in the comments. And as a true freedom lover, he also believes people should be allowed to piss in public like dogs. But this idea was likewise dead on arrival, as this is not what the founding fathers intended. A man of foresight, he was also quite early to discuss the boomer remover COVID, as he posted about it on January 29, 2020. This early recognition enabled him to sell his entire stock portfolio right before the crash. People thought this was insane at the time, but in doing so, he spared himself from the circuit breaker carnage. With this move, the big dog was sitting at $1.3 million by summer 2020. This should be a satisfactory sum for any responsible adult, but there was a major issue. The bulk of Mr. America's wealth was locked in home equity and restricted stock units of an unspecified tech company, meaning that he could not liquidate his position in the near future and therefore did not feel rich. By January 2021, our man's net worth increased to $1.6 million on the COVID lockdown rally. In light of this, Lieutenant America had a discussion with his Indian wife about retiring to India, whereupon he could hire, quote, a small army of domestic help, end quote. Commenters recommended a reasonable entourage of drivers, groundkeepers, and other simps. The estimate was a grand total of $600 per month for his army of 5 domestic helpers, which was well within his means. But there is an uglier side of living in India. With $1.6 million, you're already rich in India, but you're not rich in India. The wealth gap is wide and the pace is accelerating. If you want to really live like a Maharaja, you need enough rupees to fill a box truck. Upon further reflection, our man decided to whip it out for Harambe and chase thicker gains so that he may retire to India as a man of tremendous stature and influence, equipped not only with an army of staff, but an actual army. By the end of 2021, he quit his job that paid him in bitch-ass restricted stock units and pivoted into entrepreneurship to establish a company that does coding in Rust, which I spent 5 minutes trying to learn about and determined that you can do a lot with Rust, from making crypto projects like Solana to controlling elevators and power plants. That's all I got. He ended up selling the business in 2023 for over $1 million, putting him and his portfolio at over $3.74 million. Now, to hire a full-time bodyguard in India, you should expect to pay about 50,000 rupees or $600 American dollars per month. But bodyguards are not trained for offensive operations. The cost of such an individual would triple the expense to $1,800 per person per month. For a fire team of 4 individuals trained in offensive operations, plus another fire team for defensive ops, one would need to pay about $9,600 a month in salary plus equipment to maintain this force. Even for a man of $3.75 million net worth, this was not comfortably within reach. If he could just reach $5 million, he'd be ready to take the dive. March 6th, 2024. As a longtime Redditor, our aspiring warlord was indubitably interested in the company's IPO. Forbes came out with an article titled, Reddit, Return of the Junk Stock IPO. Analysis by the author David Traynor was adamantly bearish. He took a shot at Reddit mods, speculating that this unpaid cast of users would not take their jobs seriously, thereby demonstrating he has never encountered a power-tripping mod. He further described how Reddit's user growth was a worthless metric, as many were bots, and many real users just lurk or don't come back at all, making them a drain on the ecosystem. Lastly, he believed Reddit would never be able to monetize like Facebook because Reddit ads get no clicks, which is true. Other articles published at the same time were critical of CEO Spez and referenced Reddit's $90 million of losses in 2023. WallStreetBets users overwhelmingly agreed that Reddit, from a financial standpoint, would be a shit investment. And when bullish DD did happen to come out, it was met with pessimism and an onslaught of bear claws. In light of all this bearish DD, our man flipped the script on its head. The fact that the masses were expecting Reddit to tank meant that he'd just be the only one making that sick contrarian money. With AI ad optimization in the pipeline and a bull market in full swing, there was no doubt in his mind that Spez's little project would equal wealth beyond measure for those willing to put skin in the game. On March 21st, 2024, the big dog bought 8,000 shares for an average cost of $43.93, putting in about $350K. 4 days later, this had almost doubled, as Reddit shot from an IPO price of $35 to almost $70. But this hype did not last. For the next 30 days, Reddit stock got raked. It seemed as though the articles were right. By April 17th, the stock had dropped back below $40, and America was now in the hole. But unshaken, he held firm. In early May, investors awaited the May 7th earnings with bated breath. A good earnings report could quickly turn this thing around, shutting down the naysayers. And every dollar that Reddit went up would equal approximately 13-month salary for an additional soldier trained in defensive ops. As the big day came, our man popped a bottle and awaited CEO Spez Huffman's report. That afternoon, Spez took the mic and gave investors something to celebrate. The big dog announced that active daily users increased by 37%, revenues increased by 48%, and that its increased loss to $575 million was not meaningful. Investors were overjoyed, and the stock surged more than 10% on this news, hitting a high of about $52. Things looked even better in the next quarter, on August 6th, when Spez announced the platform's highest number of daily users, thick revenue, and a swing to only $10 million in losses. But the news was overshadowed by analyst Dan Salmon, who said that Google and OpenAI training their language models on Reddit comments was no good, and Reddit was not seeing the AI clients it needed. Through September, the stock stayed flopping around in the 50s with no clear direction. It needed a new push, or our man's army would never even reach the battlefield. That push came just before Halloween, when Spez took the mic once again to announce the company's best growth ever. New users were pouring in, and Reddit turned a profit for the first time. Spez flexed on the short sellers as the stock surged by more than 35% in a day, crossing the $100 mark on October 30th. At the time of posting, our mad lad saw the ticket at $111.31, with a gain of about $240,000 on that day itself, and an overall gain of more than $550,000. His position was now worth over $900,000. His portfolio now north of $5 million. Although his chart is now deleted, the percentage and dates alone are all that we need to do the math. WallStreetBets users mocked him for not using options, but the haters will not be retiring to the golden fields of India. With this $550,000 gain, the freedom lover will be able to afford his 2 fire teams of offensive and defensive operators for 4.7 years, enough time to establish a fiefdom. Or, if he elects for 2 fire teams of defensive ops only, he'd be able to sustain his small platoon for 15.5 years while collecting 4.4% interest. Even better, Reddit stock has since surged to over $170, though he has not posted an update. If our homie is still holding, he has enough capital to sustain an Indian militia indefinitely, making of himself a proper Bond villain. Whatever the case may be, our mad lad has the equity to export some freedom to the Raj, establish his empire, and lived as Maharaja George Washington intended. America, your ability to ignore the bearish bandwagon and trade with decisive contrarianness is worthy of the utmost admiration. Your gains stand tall above the inferior masses, and you deserve every moment with your private army and domestic staff. It is my honor to award you with the Crown of Kings. May you wear it well.
Who wants to be king?
Thank you all for watching. I welcome you to join our free Discord where we do stocks and memes all day long. I hope to see you there.